There's no good news on the horizon. These are not my words. These are the words of Pat Gelsinger, Intel CEO, whose stock is up 10% today. Whose stock is up 10% today, saying there's no good news on the horizon. And I think we have to take those words quite literally because CEOs typically try to lean on the sign of optimism. They try to be optimistic to get people to buy their stock and keep things focused on the future. He's not taking that route. He's preemptively letting you know that there is no good news on the horizon and they're taking their future numbers down. It appears this is the way across the board with virtually every mainstream company except certain niches that somehow seem to be benefiting. But we shouldn't be surprised by that because interest rates are going up. And the market seems to, hear the slightest whisper, the slightest taste of what they try to call a pivot and rallies the market. And let's discuss this notion, if we haven't done so already, enough. I don't think we've talked about it enough, so I'm going to talk about it right here. Fed pivot. A lot of people and market commentary is, the Fed might pause. The Fed might pause. The Fed might pause. And then all of a sudden, stocks can rally. The Fed is going to pause. The Fed is going to slow the rate at which they're increasing their interest rates. This is not a surprise. This is consensus. This is in the Fed funds futures market. This is what the Fed is saying verbatim. This is a fact, okay? Interest rates are going to get up. Fed funds rates going to get up to around 4.5% to 5% minimum, and then rates are going to coast and they're going to stay there. And a lot of people are trying to say that this pause is a bullish thing that means stocks can rally. Interest rates going down and the prospect of lower risk-free returns means stocks can go up, but risk-free returns being 4.5% to 5%. And a recession occurring is not good for stocks. There's no way to slice that. You don't need to buy stocks, okay? In an environment with interest rates 4.5% to 5% and an economy that is feeling the effects of that is contracting in a recession, which is going to happen with interest rates of 4.5%. We're seeing every company say forward guidance is not so good. Apple, the one company that is a big tech company that managed to hold its position as a reliable source of cash flow, that is a tech company. I'm not talking about Exxon being a reliable source of cash flow. They barely commented on forward guidance. At least that was my perspective. If you listened to the earnings call and you heard Luca Maestri talk about something with some piece of information in the next quarter, please let me know. Last I remembered, he sold his stock at the top of the last bear market rally and said the next 3 months is uncertain. So I'm not hearing any forward commentary at Apple. And I think they're right. The future is uncertain. It's going to be higher interest rates. There's a war. There's a winter with weird energy supplies and uncertain energy supplies. There's interest rates are going to be higher. There's still inflation. Last time Kashkari spoke, he said, no sign of inflation coming down, okay? We're going into winter. Energy prices are a concern. I can't get aggressive here. I can't buy the market up 2% in a day with the Dow having its best month since 1976. I mean, we know bear market rallies are the strongest and most vicious. We're currently experiencing a very vicious move. It's some 14% in 2 weeks. It's crazy. It's strong. No doubt about that. But we're just going to keep doing our thing. Third in cash, third in energy, third in shorts and other bets. That's, in my opinion, the safe, good route to continue to build wealth and take advantage of the current situation while not being caught aggressively offsides in any way. Yes, energy can pull back at any moment. That happens, but at least we'll collect a dividend, and it probably won't pull back that hard, even though stocks are relatively volatile, and they can be painful when they do pull back. Believe me, we've been there, done that on this channel. But I don't see a reason to get aggressive. I get it. Buybacks are starting again. I saw that Zero Hedge tweet, $5 billion of buybacks per day. I mean, $5 billion. So the light just went out. $5 billion is a lot of money. Okay, it's a lot of additional buying power, especially when there's concerns around liquidity. So we'll see what happens. I'm going with Pat Gelsinger. I'm acknowledging that. I'm not refusing to acknowledge that. I'm not feasting on a breadcrumb, right? I'm getting force-fed that inflation hasn't peaked by the Fed, who's the most powerful body with regards to the stock market. And then I'm hearing the CEOs say they're cautious about the future. And I'm seeing some companies miss. And I'm seeing some mega companies down 20%. I mean, Amazon, Meta, Google was down 10%. Microsoft was down something like that. I mean, these are big moves. So I'm cautious. Yes, I did buy 500 shares of Amazon yesterday at $90.10. You can pick the bottoms, but here's how I'm doing that when those opportunities arise. Companies that produce cash flow that I think have the ability to weather a recession. We've seen Walmart do well in past recessions. Amazon probably won't fall apart in a recession. 500 shares is just above like 1%. It's like 1.5% of my portfolio, my client portfolio, that I'm buying in Amazon. Just a nibble when it's down 20%, that if we get a bounce, I'll feel something. I'll make some money for my clients. But not so much that if it gets hit again, because it can get hit again, that I'm gonna die. Okay? These stocks were very expensive. We've thought they were very expensive for a long time. We still think some of them are pretty expensive. And the market might rationalize that. It might not. We'll see what happens. Future's uncertain. But I'm not excited about it. I'm not trying to do that. I'm trying to preserve and build wealth at the same time, not aggressively gamble wealth, which is how I feel like the market is acting right now. I feel like if I buy, it's a gamble. It can go up, it can go down. I don't know. I don't want to do that, okay? I don't want to do that. There's some companies I think can go up or that I feel can continue to produce cash flow, and I'm not touching them. Exxon. Maybe I could take off, I've got 17,500 shares. I was considering maybe selling 1,000, 1,500, or 2,500 shares. Just a little shave, just to lock in some gains. It's been a tremendous run. I'll consider doing something like that, but I'm just going to hold that. That is a reliable company that I know the macroeconomic forces are benefiting, and there is potential for the downside to occur. No doubt about that. Energy consumption can go down in a recession. But I don't think it's going to be a catastrophic decline. I think it could be 10% if it had to happen. I'm not even saying that's going to happen. So I hope this video made sense to you. If it did, please comment that, or feel free to. I'm not asking you or telling you what to do. If you have questions, I'm here to answer. So that's today's video. And until next time, peace out.